ZETA Global reports earnings today after the bell. We're going to be live streaming that for you later today. But right now, let's do a little earnings preview. Let's talk about what I think is going to happen. Let's look at some fundamentals, the high five snapshot, and the charts. As always, friends, leave a like, subscribe if you want more content like this. Without further ado, let's get into it. So right here on visualstocks.com, I have ZETA pulled up. We got a $3.3 billion company. They have a enterprise value of $3 billion. So very, very good, meaning if you sold all the assets today, you'd be getting basically net value out of the company. Have been having great revenue growth of 36%, 3-year revenue growth of 30%, and then a 3-year profit growth of 0% right now. But the biggest thing that we want to look for in the yearlies before we get into this quarter is that we have continuous revenue growth year over year, just continuously growing, right? 20 to 30% per year. We have our net revenue retention staying good. Our total scaled customers, ARPU, is continuing to grow as well, and that's customer average revenue per user. If you didn't know what ARPU was, revenue, like I said, that was US revenue above. Revenue is continuously going higher, but what we want to see is revenue continuing to go up, the net income decreasing, the negative net income decreasing more and more and more. And they're about to flip the profitability on the net income. And this quarter is actually supposed to be a profitable net income quarter. And then we have our operating cash flow and free cash flow continuing to climb higher. Those are 3 things that I love to see: climbing revenue, net income climbing to positive if they're not already, and then cash flow climbing higher and higher and higher. They have more cash than they have debt, which is another great thing. Shares outstanding are continuing to climb, which have been an issue for this company. But if we look here, we can clearly see that stock-based compensation as a percentage of revenue has continuously declined over the last few years. Now, if we look here at estimates, the estimates are expecting a $297 million revenue quarter coming up today, and then a 0.12 cent EPS estimate for today as well. If we jump on over here to the high five snapshot, we can see that with conservative assumptions, this is my base case for ZETA with mid to high teen growth. As we can see here, we get a fair value, intrinsic value on a discounted cash flow model using a 10% discounted rate and a 20 terminal fair value with a 10 and 12% free cash flow margin rate, which I actually think they can actually increase that over the years. We get a great $24 intrinsic value, a 35% margin of safety from where we are at today at $15.80. And we see over here on a fair value basis based on EPS, we are looking at $20.72, expected 69 cents of net income or EPS this year for 2025, giving us a 23% margin of safety. It's right between 25 and 35% margin of safety right now if you're buying ZETA today before earnings. So I do believe that it's still a great buy today before we go into earnings. And then whatever happens after earnings, whether we rocket higher or shoot down, that's going to depend on, if we rocket higher, it's going to depend on how high we go, on whether or not it's still a buy. Probably will still be a buy in our ballpark. But if it goes lower, I would definitely be looking to buy more of this company as long as my investment thesis doesn't change with something that they say, which I don't think it will. A almost 14% annual CAGR rate over the next 10 years, getting us to a almost $58 fair value in 10 years time, and then $47.61 based on EPS in 10 years time, getting us a almost 12% annual CAGR. 3% free cash flow yield, forward free cash flow yield, a 24 PE, a 22.6 forward PE, and a PEG ratio of 0.55. Left, right, and center, you can clearly see that we are a buy all over the place. The biggest thing holding this stock back is obviously the lawsuit, but there are There are rumors that that lawsuit will be getting dismissed here pretty soon. So if we jump on over here to TradingView for our last little tidbit, like I said, 12 cents is what is expected. A revenue of $296.69 million is what's expected on the revenue side. I do think that they come in with a 0.14%, 0.15% earnings estimate. So I think they beat there by at least a couple cents. And then I do believe they come in with a 310 million dollar revenue beat, beating by about five or about six to $10 million. So that is what I'm looking at here on the earnings. I think it'll be a double beat, and I think they guide higher. I don't think they talk about tariffs or sandbag at all. I think they do guide higher, and we have a great double beat and double beat and an earnings or a guidance raise. So let's talk about highs and lows. So if they do what I think they will, ZETA that is, if they come in and double beat by a good margin, like I'm expecting, and they raise guidance, I think in after hours we could see ZETA go from 1578 up to um, between 18 and $19 per share. So I do believe that we could have ourselves a 15 to 20% move on the name. I would, to be conservative, I would probably say a 10 to 20% move on this name. If they talk about, which I don't think they will, also talk about the lawsuit, just because it's a lawsuit, let the lawyers handle that. But I think if they come in, double beat, show their worth, raise guidance, I think we could see a move to 18 to $19 per share, which would be a 10 to 20% move in this name. We did already break out of this downtrend, this yellow line here, as you can see, and we are riding this green arrow uptrend, seeing we touch once, twice, almost touching there. And obviously, like I said, breaking out of this downtrend, finally breaking over here, coming back. And again, I think we are on the up and up at this time after basing out here at all of this previous resistance. Now flip to support right here with a massive volume shelf and a ton of room to run. The Williams percentage range was our momentum indicator, is on its way up, and I'm looking for it to come up here and form a Williams consolidation box, as we saw back here, and to continue to climb higher, and us to make a killing on this name over the next months to honestly years, because I do like this company a lot. They did just sign Tom Brady. I'd like to hear more about those details, as he is a co-owner of the Oakland Raiders, or sorry, Las Vegas Raiders, and I think that's huge for this company. Um, yeah, to have a big name like him. The high five flow is still green, still good there. Just been, consolidating here, and I'm just waiting for that big move higher. And you see we are way, way under um, on the RSI and have plenty of room to run to the upside as well. So overall, everything's looking good. If they missed earnings or EPS or poor guidance or one of the three, two of the three, all three, I think I think we could see a move of 10 to 20% to the downside. I think we could move down to 14. Yeah, basically, I think we can move down to the 13 to $14 range if we had like very poor, very poor earnings. Very poor earnings, we move down 10 to 20%. Very good earnings, we move up 10 to 20%. Met earnings, depending on what we beat on. If we have good guidance, I'd say we move up 5 to 10%. If we don't have good guidance, but we double beat, then we move down 5 to 10%. Those are my thoughts, guys. I hope you enjoyed this video. Again, leave a like, drop a subscribe if you want more content like this. I'll be doing an Oscar one just like this in this same format either later today or tomorrow. And like I said, catch me and Nick on that live stream today at the close to catch all of our live thoughts on earnings for Zeta. Appreciate you guys all. Hope you guys have a great and amazing rest of your day, and we will see you at